today we're going to be talking about all things artificial intelligence and investing. So we have an awesome group of panelists here, and we know this is something our readers have been really interested in diving into. So we're going to have a really fun discussion. We're going to be covering what's in store for thematic AI ETFs, how emerging tech and AI will transform the wealth management industry, and how machine learning can actually impact how ETFs are managed potentially or how they function. And we have a great group of panelists here, and they're all sort of coming at this topic from a little bit of a different angle. So it's going to be a really fun and great discussion. Gauthier Vincent is a senior partner with Deloitte Consulting, leading the firm's wealth management practice. He is engaged with most wirehouses, regional broker-dealers, and large private trusts and banks in the US. And he has some great insight into how wealth management industry is going to be transformed by digitization and AI. And we have Rafael Zayas here, who's the head portfolio management and trading at Vident. He has over 15 years of trading and portfolio management experience in global equity products and ETFs. And last but not least, we have Eric Balchunas here. He is a senior ETF analyst at Bloomberg. He manages the data on the terminal. And he also appears on a weekly segment called Exchange Traded Fridays, which is awesome. And he discusses tons of different ETFs and great ways investors can utilize them. So thank you all again for being here. And to start, I thought it'd be kind of fun to kick it off with a question that was actually written by AI. I asked AI what a good question to toss out to the panel would be, and it said, what aspect of AI most fascinates or surprises you personally, and why? And I'm going to add my own human follow-up to that. I'd love for you all to answer, which is there any AI tools that you use regularly now in your work or personal life that you are really excited about? So do we want to start with Rafael and just go around?
Hi, Lucy. Thanks for having me. So yeah, the thing that's most exciting, I think the thing I keep going back to in my head is that there was a leak from a DeepMind researcher that indicated that they thought there was no moat in AI, which meant that, open source and kind of broad variety of models could compete with some of the larger, more kind of well-known models like ChatGPT. I kind of hope that's the case because I find that stuff more interesting. So the space of open source AI and things that can be run locally on your own hardware versus these large cloud services, I think are most interesting for me. While I personally use a lot of kind of large language model, a lot of ChatGPT style stuff to help me out in various tasks. In my day job, I'm pretty constrained from a compliance standpoint. So, we're not really utilizing AI in day to day, but we're rapidly and often reevaluating those so that we can use it more and more day to day.
Gauthier, do you want
Having said that, one other thing though is we do work with issuers who do launch AI strategies in ETFs, and a part of the reason I'm here is to talk about what that's like to manage an ETF where AI is running the underlying investment strategy.
Absolutely.
So thank you very much for having us. What gets me excited about AI is this. We have been talking about AI in the wealth management industry for 10, 15 years. And we have talked about it and talked about it and talked about it, and it was never coming. And now with generative AI, I think AI is finally democratized, or at least it's accessible. And now it has landed, and everybody is talking about it. I cannot think of a single wealth management firm which board is not talking about AI and which managers are not actively thinking through use cases and putting in place and trying to drive these use cases to something concrete and real. So it has landed, which is super exciting. Now, do I use AI myself in my personal life? No, not yet. But who knows? Perhaps that will come. And as long as my kids do not use it to do their homework, I'm happy.
Yeah, I don't use it really. I'm amused by it. I see stuff on the internet. There's a lot of, whether it's images or what AI can spit out in terms of text. it is interesting for sure. I haven't really seen it solve any major problems, at least with my own eyes or anything I'm reading. But I think just seeing what it can do in certain cases, you get a feel for the potential, and just trusting in tech. You know, as somebody who grew up Gen X, I grew up with rotary phones, you know, a television set, and now we're here. You know, the smartphone in particular is ridiculously advanced. I'm that old, I guess, but that's a big movement in my generation. So I can't even imagine what the next 40 years will bring. So I think these things take 10 years, and then you look back and you're like, whoa, but day to day, it doesn't seem like a lot's happening. So I would leave it there, but I personally haven't like spent a lot of money on any specific AI or anything. So I'd probably be like somebody who, I'm not an early adopter, but once, you know, I see a couple people, I will get into it.
But
Yeah,
actually, to build on what Eric said, right? When it comes to innovation, very often we human beings, right? It's part of our psychology. We tend to overestimate the pace of change and underestimate the depth of change. And I think AI is going to prove that rule about innovation right one more time, right? There's a lot of hype. We overestimate the pace of change, and we are actually starting to see some of the constraints, but we underestimate the depth of change. And AI, it's going to be ubiquitous, it's going to be everywhere at some point.
yeah, absolutely. And yeah, like you mentioned, I mean, this past year we've seen it's been, you know, the year of AI hype, and that has translated into huge gains for a handful of tech companies, as well as the thematic ETFs that focus on AI software and hardware companies. The largest being the 2.8 billion Global X Robotics and AI ETF, which is up nearly 40% over the past year, and year to date is still up about 16%. And, you know, obviously within the Mag 7, now it's sort of more like the Mag 4, we've seen just huge gains over the last year. So I want to ask Eric, and everyone else sort of feel free to jump in, but for investors looking to invest in this AI theme or AI boom, is it fair for them to feel like maybe they missed out on their chance already, or is there a longer term growth opportunity ahead of them for some of these AI thematic funds?
I can go. I wrote about this recently. ETFs are my specialty versus AI, where I'm, you know, casual knowledge. But the AI ETFs, I put AI and robotics together, have done something fascinating, which you rarely see. They've gotten a third bite at the apple. Normally, you can't even get a second bite at the apple. What do I mean by that? Robo came out. That was the first one. There might have been one other close after it. Had this nice run. People bought into it. And then, like most theme ETFs, they're more volatile, right? They're going to be usually double the volatility of the S&P. So they go up a lot or down a lot. So they went up, came down, right? And then some people left. It's like, okay, it'll settle into like a $400 million category or $1 billion category and kind of like move like this. That's typically what happens. Well, then it came up again. People came back in the second time too. Then it went down again. Then it came back up again with NVIDIA. NVIDIA was like this third booster rocket, and the flows came back.
Mm-hmm.
And so this year, robotics and AI ETFs are leading all themes in flows. And I think I thought about this a lot because I've studied why theme ETFs are, in my opinion, here to stay. First of all, I think that in the modern portfolio, people have a very vanilla core, like 60-40. Usually it's low cost. And it's brilliant, but it takes 40 years. So it's boring. So people look for some things to put on top that can give them something to do, something to speculate on, something they don't want to miss out on, like potential future FOMO cure. And so for a theme ETF to actually work and become a hit, you need two things. You need a shiny object moment, and then you need it to make sense in the person's brain. It has to like play with their imagination a little bit. To me, AI is the perfect poster child of the second one, which is everybody who has seen movies, TV shows, there's so many things that have come from the future that are visualized to us, Terminator 2, right? Minority Report. I think this is easy to visualize. And people like me who have seen going from like writing letters like pen pals to the way I can communicate with somebody in Australia last night on FaceTime to do an interview in 5 minutes before dinner, no biggie. That kind of leap forward, I think people are like, I get it. And a lot of the stocks in here, not all of them, like NVIDIA is in big funds, but a lot of the stocks in here are not going to be in the big indexes.
Yeah.
And so to me, this is a natural thematic play. It's something that people can visualize. It's something people feel like, well, I can handle the volatility. I just don't want to miss out. I don't want to see like robo taxis and some of those robots that we see on the Boston Dynamics videos. I've seen Chat GPT. It's gotten to the people enough that it's jogged their imagination. And so in my opinion, this could be a top 5 theme of all time because of it has shiny object moments and it's got that imagination. It captures your imagination. And so that's why it's got a third bite at the apple. And that's really impressive.
And actually, if I may add, right? So the valuation of those tech firms reflect the fact that investors are trying to capture the future of AI, right? And to capture it in one moment. So that drives a lot of movements in the stock price. But when I ask myself about the underlying trend, what I see happening on the corporate side, right, where AI is becoming a reality, is that a long-term trend? And I think what we all see when we work with our corporate clients, with our wealth management firms, is that AI is fast moving from it's an initiative, let's create a center of excellence, let's try a few use cases. So AI in a box, if you will. We're moving from that to, no, AI is going to be in everything we do.
Yeah.
So there's a long-term trend. AI is going to become like we do process reengineering, we do this, we do automation. AI is going to be everywhere. It's going to be part of the fabric of what we do. And I hear senior executives in wealth management potentially saying, well, who knows? But from an efficiency standpoint, we may see 20% gains or 30% gains, right? Because we all talk about the shiny objects or the shiny applications of AI in the front office, perhaps, hyper-personalization of experiences and things of that nature. But it's going to be part of operations, part of the middle and back office. It's going to drive efficiencies. So there's a long-term trend there. It's going to impact the business in a profound way and for the long term.
Yeah. And just to add to that, I think what we're seeing as far as the AI theme is we're seeing the companies that are enabling AI throughout the entire economy, not just within investment management, right? Because which is why that theme is so hot. It's not because of how it's performing specifically within investment management. So I think one of the topics we were discussing is prepping for this. What do you think? Are we talking about AI and as a theme within ETFs, or are we talking about like AI as an investment manager? And I think we're seeing is that AI as an investment manager is a little bit, the results of the AI theme are probably not being displayed quite as well through AI as an investment manager, right? Like I don't know that there's been a breakout hit of an AI money manager that's out there that's kind of crushing the market, month in, month out. And the other thing I think that's interesting, so that's, one thought. Separately, I think the one thing about AI that's different from, say, the rollout of the internet is that there was a lot of capital expenses for firms to roll out, putting up websites and setting up e-commerce sites potentially and all that stuff. Whereas the use of AI is much more democratic, right? It's within, just talking with colleagues and clients, we're seeing that it's not just top down, hey, management has a plan to how to roll out AI in the firm. What we're seeing is younger people within firms are pushing the use of AI internally and pushing up as much as it's being pushed down. So I think that's kind of also why this has been such an explosive kind of area for discussion.
Yeah, absolutely. And Gauthier, you spoke about this a little bit, but I'm interested in this idea that every company is going to become an AI company, sort of in the internet.com boom, there was this idea that every company was going to have to become an internet company. And you sort of see people saying something along those lines with AI. So in terms of how that would affect the thematic AI opportunities, I mean, do we see a future in which there isn't even necessarily a theme that's AI, it's just everything's AI, or how does that affect something like industrials? I don't know, Eric, if you have any thoughts on that.
Yeah, this is where themes, we have a thematic capture score where we try to find, okay, how much of the revenue actually comes from AI and robotics. It is tricky. I think, in like if you look at the ETF chat, this is the one that's like named after Chat GPT, and it's got NVIDIA, Microsoft, Alphabet, Adobe, Meta, Salesforce, Baidu, Advanced Microsystems, Amazon. I mean, how much of Amazon's revenue comes from AI or robotics? So this is where this would be a decent score, but not maybe a great score, because what investors are going to have to deal with is this. NVIDIA is I think NVIDIA's top 5 stock in the S&P at this point, or it's got to be close. You probably own NVIDIA. So now you're going to own a lot more of it. Well, I guess you go overweight NVIDIA because you now are into AI. But a lot of theme ETFs out there hold nothing, or like 1% overlap with the S&P. So I would look through the holdings. Now, the issue with AI in particular is these big firms seem to be driving it. Robotics, like Robo, you're going to find a lot of stocks you never heard of. So this is something that investors will have to wrestle with. I mean, there's really no, we come up with a score to try to give you the purity of it versus the revenue and the active share. And the higher both of those things are, the better score it gets, because we feel like most people probably already own the S&P 500, right? And they probably already own MSCI EFA. So yeah. Are we serving up something that's different than that? And we're going to reward that if it's different. Because like I said, these indexes, these big indexes from MSCI and S&P, they're very, what's the word? They make you jump through a ton of hoops to be included. It takes a while. So theme ETFs, in my opinion, are great for capturing stuff that is smaller, not in the big indexes. And also it's got M&A pop. Sometimes in a theme ETF, you're going to have smaller companies that get bought by NVIDIA, and you get like a 90% jump up on that purchase. Happens all the time in the biotech ETF. So I just think that's the purpose of a theme ETF. Now, NVIDIA and some of these big firms, I think when you bring AI into it, you kind of have to hold them. But how much do you hold them? Chat gives NVIDIA a 7.6% weighting. We looked at I think there's like 12 or 13 of them. All of them hold NVIDIA, but on 1 or 2 of them, they're below 2% weighting. So I would just look at the weighting in the stock and get a feel for, you may want a lot of NVIDIA and you may want less NVIDIA because you already own NVIDIA. These are the things that I think people have to wrestle with when picking these ETFs. And yes, some of these stocks are going to be from different sectors, but remember, the whole purpose of a theme ETF is that the GIC sectors are like stuck in time. Like they don't evolve as fast as tech. And so themes can cut across the sectors in a way the sectors are just sort of left helpless. So the idea that this is going to be, I don't know, 30% industrials, 10% tech, that's good. But I don't think you'd want a theme ETF to be more than 80% in one sector. I think that would be, there's one called the Internet ETF that's like 80 or 93% tech. It's a popular ETF too, but that's one where I'd be like, do you really need a theme there? Yeah. Why not just call it tech and move on? But I'll leave it there.
Yeah, no, absolutely. That makes a lot of sense. And, are there people who are would rather invest in a tech ETF and have lower fees and say, I'm, not paying for the thematic ETF, I'm invested in QQQ or another tech ETF. And I see, I'm invested in a lot of AI companies by investing this way. So I think that it really obviously is personal. And then I wanted to also ask something. I've seen a lot of people sort of talk about this comparison between the dot-com boom and bust and the cycle we're in now with AI ETFs. And, we spoke a little bit about the long-term growth of some of these thematic funds, but what do you say to people who are concerned about, these AI tech stocks, specifically NVIDIA, ones that have seen huge growth in the past year, becoming a bubble, and investors feeling the pain of that if it eventually bursts?
Are you asking me? Real quick, and then I don't want to take too much oxygen here. Look, the beautiful thing of the rise of cheap passive and the rise of now there's cheap active. So the cheaper and easier it is to build a core of a portfolio, the more tolerance people are going to have for volatility in the hot sauce. So in other words, let's say this is the ARK effect. We predicted ARK would not see the outflows people thought, because back in the 90s, people would put like a ton of money into Janus 20. And this is like their real money from their core, because people just chase 5-star managers all day. And that money, when Janus 20 went down fast, people were like, oh my God, that's my retirement money. They'd panic and they'd sell at the bottom and then go buy at the top again. It was like the worst thing. The 80s and 90s were like the worst behaved eras. So then Vanguard comes along, makes everything cheaper in the core, whether it's passive or smart beta or active. Now your core is probably under 20 basis points all in. And you own all of the serious investor stocks in the core. So your whole, like your nest egg is good. So you can go wild, and people seek out a little wild to add on to it. And when that wild goes wild, people are like, A, I expected it, and B, it's not a big deal.
Yeah.
Because my core is fine. This is not, I'm not banking serious stuff on this stuff. And that's a beautiful thing. That's another nice byproduct, I think, of the low cost era that was ushered in over the last 20 years by ETFs, Vanguard, BlackRock, et cetera, is that now we can speculate and actually benefit from speculating, because we're not going to get shaken out when there's a little volatility. Because if you want to really capture a theme that's young, you're going to have to take some volatility. We've been covering Bitcoin extensively recently. I would put that in this bucket. Like if you really want to benefit from that, you're going to have to take volatility.
Yeah.
So the 60-40 to me is like a cure for volatility nerves. It's almost like it soothes your nerves knowing you have this cheap core. So I think it's going to happen, but be ready for it. And the more happy you are with your core, the better you'll be able to stomach it.
Yeah. No,
And I would add, right, and I'm not an equity analyst, right, that in the long term, how do you get exposure to AI? It's a little bit like now, how do you get exposure to the internet? You get exposure to the S&P 500 because everybody is doing internet, everybody is doing AI. But perhaps where they will see from an investment standpoint a continued trend is more, who is enabling AI long term? And I think it's hard not to think of the hyperscalers, right? Because fundamentally, how do you enable AI, right? It's about data management, data services. And so it's hard to not to think of the hyperscalers being long-term impacting as the key enablers of AI.
Yeah, absolutely.
The other thing I'd add is that I think in the era of social media, I think we've seen the amount of rallies and sell-offs that investors have seen in the recent history. I think people are becoming attuned to how this plays out a lot more. We've seen it with, you could take it crypto, you could talk about the original robotics. I think that there's a lot of examples in people's recent mind about how these run-ups play out over time. And so I think where it used to be, you have to be, an old timer to remember some crash from decades ago. I don't think that's the case anymore. The other thing is that social media really gives voice to haters in a way that, I think that people didn't really have before as much. So I think I think there's a lot of counterbalancing impacts to bubble. I mean, there's still going to be bubbles, of course. I'm not saying this should be reduced the size or magnitude. I'm not making any kind of conjecture there. what I'm saying is that I think there's a lot more conversation about this question than there is just cheerleading, right? I think that you can see a wide variety of opinions, and we're seeing that out in the kind of wherever you read your information or get your information from.
Yeah, definitely. And Gauthier, I want to ask you, you mentioned, this phenomenon that we've been hearing a lot of talk about, digitization, AI, and wealth management, and a lot of that is coming now. Could you give us some examples of use cases that you think are really transformative in terms of AI and the wealth management industry?
Sure. When I think of use cases in wealth management, they fall in four buckets. You have use cases about when AI helps you hyper-personalize the experience that an investor, retail investor, or an advisor will have. I see. So it's, for instance, I know a large asset manager who is already using AI for inbound calls and directing inbound calls to the right person in the call center, so that as an investor you get connected with the right person right away. Right? It's a phenomenal change. Right? I see use cases that are about sensing, so trying to get a better sense for the investor true risk preference, for the investor sentiment, right? In the wealth management industry, we talk about this thing, we have talked about this thing for years, but now we can start to measure this real time, right? So this is super helpful. Use cases, third bucket, is about manufacturing advice. For instance, a use case that I've seen now 4 or 5 times already at different companies is how do we use AI to basically bring together the research that the company has created over years, sift through it real time, and then come up with the insights that are relevant to the discussion that a particular advisor is having with his or her client. Right? And that use case soon will be table stakes because, again, I've seen 5 or 6 companies working on it, which is one of the typical applications of AI, right? Generative AI is super good at reading a lot of information and summarizing it, or also very good at language recognition. So 2 of the examples that I gave are just about that. And the fourth bucket, and perhaps the most important bucket, is about efficiency. And there are ways to drive efficiency. I think an advisor that needs to read a trust document, it's complicated stuff. So you apply generative AI to go through the document and find the nuggets, what really matters, or analyze powers of attorney, right? So you have multiple examples, or help train an advisor or train a client, right? These are obvious. So think of supervision in wealth management. You need to understand whether there are some suspicious behaviors by your advisor, so you can recognize patterns and quickly direct your supervision officers to potentially risky activities. So a lot of applications in terms of efficiency. Another one that is often ignored: AI now can be used, generative AI can be used to write lines of code. So when I see a lot of companies in wealth management and outside going through big replatform efforts, right? They need to recode trading platforms from COBOL to Java. As part of that technology transformation, generative AI is an important tool. So there's so many applications in terms of efficiency.
Yeah, absolutely. And I'm curious too, in terms of how this will affect how financial advisors communicate with clients. I mean, do you think that in a way, if there's a lot of wealth management companies and financial advisors using some of the same tools or processes, does that sort of, in a way, take away their, some of their competitive edge or ability to stand out? What do you think about that?
This is actually a very good question. I think the regulators are very concerned about that, and the industry is very concerned about this. So when I see different broker-dealers or wirehouses and trying to find the right use cases when it comes to generative AI, everybody is very careful not to move too fast when it comes to client-facing applications, because then you might incur reputational risk, or the regulators might tell you, is it really in the best interest of the client? So are you compliant with your fiduciary duties?
Yeah.
So as a result, I see firms saying, okay, we are going to use AI, but we need always to have an individual a financial advisor, somebody on the financial advisor team, check the results before it goes to the client. So it's more generative AI is to help the advisors come up with the right ideas, but then it's still their responsibility to make sure that this is the right idea to the client, for the client, as opposed to embedding AI in a client-facing tool, resulting in advice that will be directly communicated to the client. That is loaded with risk. And the regulators don't like that at all. And most firms that I know are very careful not to get into that too fast. So AI, I see in the next several years, will be in the background, enabling the advisors to do their jobs faster. A lot of AI driving efficiencies in core operations, but much less than what we might think in terms of AI being embedded in investor-facing applications.
Yeah, that totally makes sense.
So apparently the SEC chairman in the last week has, in two separate investor advisory group kind of contexts, has mentioned hallucination risk specifically. And there is concern about, the SEC staff, I should say, the chairman was. So I think it's gotten to the point where, hallucination, the concept of hallucinations in AI, where, AI may be, kind of as part of its model training, may come up with things that just seem like gibberish to humans, right? And so the fact that that is a very genuine risk, especially with large language models, but the fact that they're so focused and so educated on that specific issue tells you how concerned they are. And this is and the feedback we're seeing is that it directly relates to the concept of advice giving. Exactly. There's already the potential risk of kind of using an AI to promote one's own products and services.
Yeah.
I would argue that the finance industry doesn't need help from AI to do a little self-promotion, but regardless, there's this concept of, when you have AI giving advice to people, that is just so much riskier. And not just, the firms are scared of it, but also the regulators are. So I think a lot of people are worried that they might end up in the crosshairs if they're too far out in front of that, for sure.
Yeah, and when I think of AI, to build on what you said, Rafael, right, in the investment world, right, you can see applications in terms of research, right? AI will definitely help. It's already helping democratize research and access to research. So for retail investors, it's great, right? You can do research much faster, and there will be tools being developed with generative AI embedded in that to, again, give access to quality research to a lot of investors. You could see AI being super helpful in terms of education, right? You can learn fast. You can educate yourself. Super helpful. In terms of investing ideas, right? They need to be screened by somebody else, because this is where we run into hot waters really fast.
Yeah, absolutely. I'm even thinking about the new spot Bitcoin ETFs, and one of the big issues is will financial advisors adopt them and use them? And so much of investing is personal, so it's hard to imagine how how AI will sort of monitor that or contribute to that. But it's really interesting what you're saying, sort of how much of it will become standardized if AI becomes widely adopted. But it sounds like a lot of wealth management firms now are very sure about keeping that sort of personal connection, making sure everything's at least overviewed by a real advisor.
Yeah, and then everybody is convinced of the potential of AI, right? But at the moment, people are thinking through, what is the infrastructure that I need to put in place to get advantage, to take advantage of AI? So from a governance standpoint, what does it mean, right? Because to use generative AI, right, you need a lot of data. You have the governance in place to make sure the data is always clean. Otherwise, right, garbage in, garbage out. How do you maintain that cleanliness of the data? Think of the body of research that a company has created. What do you take out because it's too old, right? What is still current? So huge issues, big questions around governance, data governance and AI governance, right? How do you ensure the quality of the output from these generative AI models?
Yeah. And a lot of these questions I know also relate to what you were talking about earlier, Rafael, these AI managed ETFs or AI powered ETFs, which are different from the thematic ETFs, and that thematic ETFs are actively managed ETFs that track a theme, just for everyone in the audience, and hold stocks related to that specific theme. Whereas there are also ETFs that are part of their investment thesis is that AI actually helps pick the stocks and manage the portfolio. And those have sort of not seen any performance to write home about. But I'm curious, Rafael, if you think there's any potential there that we could see this improve and sort of be a trend that takes off a little more.
That's a great question. I think I think history would indicate that typically you would see, an exemplar kind of product that captures people's imaginations, or a specific or model that is the new Kathy Wood, if you will, right? Or someone who kind of a specific model that garners attention, and then people would maybe, kind of buy into that model, help boosting the returns of that model, and then things like that. So I don't think that, I think my guess would be that we would see something like that it would rhyme with the history we know about. An AI model wouldn't be that different from a human investment manager, right? But yeah, it is interesting that we really haven't seen kind of results like that. I know, Eric, I think you've spoken about, some of the kind of constraints. I don't want to steal your thunder on some of this, but, you've talked about how some products could have very high turnover, for instance, right? And you said, so I think we're still in the early innings, right? Where AI models there's probably not the right one out there yet. It seems like that just has the, kind of the returns and or the characteristics that kind of make it like a, must watch kind of product. Especially when you have like these kind of weird anecdotes of how it's performing, how it's turning over the portfolio, things like that.
Yeah, we looked at the I don't want to pick on them. They're great. The two guys who run this are nice people. And the idea was really fascinating. 5-6 years ago, they launched AIEQ, which was run by IBM's Watson supercomputer, uses AI, something like it could go through like the work of 5,000 analysts in a year, but they could do all that work in like an hour or a minute or something. And it's a pretty strong pitch. But the problem is just beating the market is hard. Whether you're a robot or a computer or a human, or, it's just hard. And throw on top of that, this thing had over 1,000% turnover. So that's going to give you a couple, like 300 to 4% extra trading costs that you have to overcome on top of the fee to just get to zero. That's like you have to do that just to get to the starting line to tie the index. Yeah. Then you have to do better. Now, the other part about turning over is, turning over so much, like it's really tough to catch return that way. Sometimes you want to let your stocks do well, especially if you're looking through analyst reports and whatnot. Yeah. So I would like to see two things. AI actually used in a lower cost vehicle that trades less. Perhaps that could do something. In other words, let all the computer's power work on the research. Yeah. And then when you actually invest, stop the computer from going crazy. Just because you have all this power, don't let it trade all the time. So this one looks like it goes computing power on the research and then uses all the computing power in the trading. I would like to see a more sort of conservative active on the trading side. Maybe that'll work, but I would also argue that smart beta, which is simply emotionless rules-based active, is a form of AI in a way, because I used to call it smart beta active management AI, because it takes all the best parts of humans, looking at valuations, yada, yada, and then removes the bad parts like the higher fees, the turnover, the emotion. So yeah. Smart beta to me was like a early, maybe I'll call it like a early stage AI attempt. It's even called smart beta, which sounds kind of AI-ish. Yeah. And that's a $1.3 trillion category. So there's potential, but AIEQ is our first sample, and those are the things I think they may need to look at improving for that to be successful. So I'm more bullish right now on AI, the theme, than I am on AI, the investment manager.
Yeah, you actually just spoke a little bit to my next question, but I was going to ask Rafael and Eric you that too. Are some of these strategies we're seeing with active management becoming advanced, and especially as the technology evolves, sort of on the path to become so advanced that the sort of AI-powered ETF, it might just sort of become what actively managed ETFs effectively do, with a person at the helm, obviously overseeing what the robot is telling them?
Yeah, I think the way Gauthier was describing the way that AI is going to be embedded in all aspects of all operations of all firms, kind of, I don't know if he used all that exact language, but, I think what we're going to see is that a lot of the active management processes will be enhanced through the use of AI, whether it's combing through data, making selections of model parameter, even if it's, you have, there, if you take a standard quantitative model, right, there's still parameters in there, right? And then what's the difference between that and AI? Arguably, just the parameters are more dynamic or more algorithmically changed or things like that. So you might have more AI helping tweak the parameters of certain quantitative models, or helping summarize data so that qualitative managers could review it more easily, or review larger amounts of data, or more easily spot anomalies, or more easily interrogate the contrary opinion, right? More easily play the devil's advocate to any opinion they have. I think that kind of approach, where using AI to supplement existing processes, is going to be easier from a regulatory standpoint, and kind of more aligned with, I think, how I agree with everything Gauthier said before. I mean, he's exactly right, I think, how this plays out in practice. And so, yeah, just I think that's kind of more, I have line of sight of how that story plays out, more than AI just replaces humans, and who's the you have to name AI models on the prospectus for funds and things like that.
Yeah. And I'm curious if you see any regulatory headwinds in this area. I mean, is the SEC concerned about that at all? I mean, there's AI-powered ETFs trading now, but as this sort of becomes more advanced and maybe becomes more of a phenomenon, do you predict any, regulatory issues with sort of how some of these strategies could evolve?
Oh, absolutely. So what we're seeing is that the proposals that are coming out of the SEC, which aren't in effect yet, but they are, I think I think I summarized the industry response to that is it's wildly too broad, and kind of not descriptive enough, and leaves it so that, spreadsheets might be considered AI, right? I mean, it's written at that kind of breadth of thought. And so I think a lot of industry groups are very actively pushing back against that rule.
Yeah.
I think that's a common theme in multiple areas of regulation right now, between industry and the SEC. And so I think a lot of people are really curious to how this plays out, but it's certainly the case that the SEC seems really interested in pushing forward meaningful regulation on this, and pretty soon. And so I think there's a lot of hoping that a lot of waiting and anticipation to see how those regulations shake out. But yeah, I think there's a lot of kind of curiosity, but also fear on the industry side, that it might be overreaching. But yeah, we'll see how it plays out.
And I think the context of this is that in the last 10 years, the regulators have been pushing for tighter fiduciary standards across the industry, right? Mm-hmm. That was a DOL rule. Right now, it's best interest. But if you step back, what's happening is there are tighter fiduciary standards sweeping through the entire industry. So that means every advisor needs to do everything in the best interest of the client, and needs to be able to document it, and need to be able to take accountability for the advice given to the client, right? So when the regulators see AI, they're saying, oh my God, is that going to undo everything that we have been doing for the last 10 years, right? So the last thing they want is the machine to create advice, and there's nobody that the regulators can hold accountable for the bad advice.
Yeah, yeah, that's a great point. And I'm going to switch to some of our audience questions now because people submitted some great questions. And this is one we got that's related to what we're talking about, which is, should people in the industry be pressing for even more intelligent regulation that could prevent, issues that happen if AI does hallucinate or there's a crash? Rafael, do you want to take that one?
I think it is, I think yes, but the question is, how is it has to be done. A lot of these issues, I think come down to how is it done well, or is it done overly broad? And maybe it's the case that we won't know until after the fact, but it's certainly I think, to what Gauthier said, like, investment advisors have to be held, if you're going to start as the premise that investment advisors should be responsible for the investment advice, right? An advisor is a firm, and advice given is anything or anyone or any from that firm. I don't think there's a strong disagreement that investment advisors should be responsible for the advice, right? And so I think the question is, how, if an AI if the regulations are there, how can you use AI to that mission, right? What's fair, what's not, and then what's the, what kind of outcomes would there be if there was a bad outcome, right? I don't think AI, I think implicit in that was that maybe AI might lead to a bubble, like the way that was phrased, right? I don't think it's the case that, like, AI is necessarily going to drive us to or away from a bubble, right, kind of outcome. But the question is, how do we continue to make advisory firms responsible for their advice, and how do we align incentives so that they don't kind of try to blame an AI? Oh, that was just that screwy AI. That wasn't us,
Yeah.
And so I think, that's a big part of the concern currently.
Yeah, absolutely. Then the next one, this is another audience question. I'll toss it to Gauthier, but I'd love to hear what all of you think. Do you foresee artificial intelligence having a larger impact than the internet has in the last 25 years?
Oh, that's a really difficult question.
Yeah.
I think it will have a major impact. As I said at the beginning, we only underestimate the impact that AI ultimately will have. But I cannot say more or less than in internet. Different, but profound.
Yeah, absolutely. And then I'm curious from hearing from all of you, this is another audience question. What can AI do you think cannot address, or is something that within the financial services or investing industry AI is not going to be able to touch or compare?
Well, go first, Eric.
Okay. Personality. I mean, I know AI is getting very good, but so I lead a team of researchers, and I've always thought this, because Bloomberg has automated stories. Like, we can take numbers and just put words around them, but there's something special about the human voice, and AI can get close, but I just feel like we're going to, at least in my profession, we're going to enter a place where your voice, your take, your opinion, things that you're, forming in your head through your own experience, out through the filter of your life. There's just no way a computer can ever take that away. And so I always tell my team to go further than you think, put more of yourself in the words, develop a voice and a personality and use it. And I think again, every industry is different, but I would just lean as hard as possible into anything that's actually human, and as opposed to being a robotic employee, a robotic writer, because the robot's just going to be able to do it soon.
Yeah.
And real quick on the internet AI, I was recalled of something. I went to an SEC conference like 6 months ago, and Gensler spoke, and it was off record, but he said, I think it was off record. I guess it wasn't. I tweeted something out on it, but it was it was for the staff. But he said it wasn't bad. It was just said basically that AI is more transformative than the internet. And just because he's the guy from the SEC plugged in, has,
Yeah.
I don't know how much like intel he has, that he definitely has more than I do. That's an interesting comment from him. I
Yeah.
was surprised to hear him that bullish on AI, but I throw that out there just because I don't know if it's bigger than the internet, but that's what he said.
Yeah.
I like that, and to add to what you said, Eric. So you talked about the human element, right? The personality, the human element. I think that's very true. In the same vein, there's a question, if we want to be philosophical, there's a question about truth and how we'll continue to ascertain what the truth is. But let me make it practical. So a lot of companies, so I think wealth management firms, right, are partnering with some technology vendors to go faster on AI, right? Think of Salesforce or think of Microsoft Azure, right? All these are deeply embedded in the wealth management firms. They have AI capabilities. And so the firms and their vendors, their technology platforms are trying to cooperate on AI. So they need to get access to a lot of data. But whose data is it? Is it the firm's data, or the data belongs to the vendor platform? And the vendor, the platform vendor, they have access to data pools from a lot of many other clients of theirs. And so they combine all this. At the end of the day, it's very difficult to trace any insight from a generative AI model to the original data. And was the data correct or was it flawed? So there's a big issue there, which is around governance, but more fundamentally, how do you trace an insight to its source, and how do you know that this is the right insight?
Yeah.
So the human element that Eric mentioned is critical, but I think this truth element is very important as well, and we're going to wrestle with that in the years to come.
Yeah. And then
So, just real quick,
okay, go for
I
it.
think a lot of my understanding is that there's a lot of investment advisors in the audience, and so I would say that industry is already kind of grappling with the kind of rise of robo advisors, right? And so if you think about, what if as an advisor, if you're thinking about what separates your firm from a robo advisor, right, or what separates you as a advisor from a robo advisor, right, and what value do you bring? I think that you just leaning into those aspects, right? And just some of your clients may hear things differently from you than they would hear from, an app or an algorithm or what have you. And if you can answer, and so it's likely that people here have already been grappling with that. And so just keep thinking about it in that context, understanding that robo advisors will have access to what Gauthier referred to, the hyper personalization they referred to before, right? Robo advisors are going to be getting better, but keep true to what separates you from those robo advisors.
Yeah, absolutely. And then Gauthier, I'm going to ask you one from the chat. To what extent, or do you at all see AI adding inefficiency or burdens for people working in wealth management or finance in the short or intermediate term?
I think it's going to help. It's going to create efficiencies, right? The image that I heard one day is that of the Avengers, right? Do you have a super suit or not, right? Without the super suit, Tony Stark is not worth that much, right? But with a suit, he's worth a lot, right? AI for me, it's this super suit that will increase the efficiency of I should say, the productivity of the advisors by 10 or 20 fold.
Yeah. Then one more for Rafael or Eric. Someone in the chat asked, how will AI impact stop loss and take profit strategies? If you have any thoughts on that.
I saw the question. I already was just looking on Hugging Face, which is a model repository, kind of open source. There's already solutions out there. So, if you want to kind of look at models that are out there, I mean, I think there's, if you're talking about a personal trading strategy, there's already, kind of code that you can look at to kind of run trading bot strategies. And you could, if you're inclined to want to run one of those, maybe you think AI has it perform better or worse or what have you. I mean, I can't comment on any specific trading model or anything like that, but it's certainly the case that people are going to be generating models and have the code available for people to run along those lines. I don't know if that's helpful for the questioner, but
Yeah,
that's I mean, yeah, that's what's out there.
well, thank you guys all so much for joining the panel. It was great to hear all your different perspectives. And thanks everyone so much for joining and asking questions. We're going to be having webinars every month at ETF.com. This one will be on the website for everyone if you want to rewatch it or you missed it. And next month, we're going to be doing another webinar on ESG and how the future of sustainable investing could play out. And I will also be moderating that one on April 11th. So definitely tune back in for that. But thank you again to our awesome panelists for joining and taking the time. It was so great to hear from you all.